Good morning, traders! Welcome to our free weekly analysis video. I'm Juan Maldonado from the Elliott Street, and please visit our ElliottWaveStreet.com to read the disclaimer. Here we have the dollar-yen that has been going down, but the next question is where we are going, where the price is heading after this drop. Well, let's go to the weekly chart to explain the big picture. This weekly chart shows that finally our B wave is over. Last week we have a pretty big red candle. This candle confirms that the cycle up it's done and the price is ready to start falling. Our next destination on the weekly chart on the longer term is the 104.50 area. We have all this room here, and once we have the breakout of the support, the next level will be the 100 area. So we are following the trade from the inside in order to make some money, of course, while the trends develop. So here on the lower time frames, we have a first attempt to trigger the trade at the 35. 109.35 right here. That was my first level. And last week I found a second entry at the 108.72 right here. So that was our second entry to sell the dollar yen. We have active the trade, and the next key thing here to watch is this wave 2. Because let's see how deep is gonna be. I don't think that the wave 2 is gonna be too deep. Right now I have my stop loss at the 108.72, and of course I share all these trades before they happen with my clients. You can take the trial of the membership. I will give you more details at the end of the video. So here we have the hourly chart. Look, we did a full top-down approach coming from the weekly chart here to the hourly chart, and we are in the corrective wave cycle. If you are looking for a new trade to this week, a nice setup will be if the price makes here the higher high and fails to continue and reverse. That will be a signal. That will be a trading signal to follow the leg down and to continue with the move. My target for this week is going to be at least the 107. We can break out the 107. We can go to the 106. Anyway, I already take my trade, my first trade at the 109.35. The second one at the 108.72. And I already have my stop loss at the break even. I already take some partial profits. I make some good money there. And here could be an addition. Let's see how the price is going to move during the session. And this is the S&P. The S&P is one of the favorites for the week because it's starting to reverse. So we have a pretty deep leg down. That's a discounted price. And here comes my first trading plan on the S&P to buy it. So this is a support area. The price bounces up. It reverses down. But there are not enough sellers at this area. As you can see, the price reverse. So when this happens and moves above the old support and now acting as resistance right here, that's a buy trade signal. That's an Elliott wave validation. A little bit aggressive, but that's a validation. So what I'm thinking that is going to happen here is that we are going to have a wave 1, some sort of 3-wave sequence over here for the wave 2, and then, boom, the wave 3. So imagine taking this trade with a little risk and a huge potential of profits because the target is going to be the previous high. It seems that we are at the validation point at a discounted price. The S&P is cheap compared to the prices that we have been seeing before. During December, the S&P was trading above the 3,250 area. And now we have a nice discount here in the S&P. Let's have a look at another instrument, gold. Gold has been going higher. We have on the daily chart a minimum target at the previous high, the 1555 area. Let me show you something on the monthly chart that is pretty cool. I'm going to hide some of the waves so we don't have all this thing. Actually, I need another degree to explain better my point. There we go. So first of all, I remember I was telling my clients this morning. I remember when we were back on 2012, I was doing my daily wave counts for the clients back there, and I was looking for the leg down. You see this wave count that is there is the same one that I have on that year. And those days I was saying, hey, it seems that we are going to have a big drop to the downside. So of course it was hard to believe because the move up was pretty strong. And I remember those days that a couple of clients sent me an email, hey, are you crazy? Gold is going up. It's going to continue going up. And I said, no, look at the wave count. It's showing a triangle. It's telling that we are going down. Well, look what happened after all these years. But now the price started to reverse again. And I think we're going back to those areas, to the 1900 area, maybe more. So that's my monthly target. Looks pretty good, right? And if you have been following my analysis, you know that I was looking during the last 2 months, finding the end of the wave 4. The wave 4 here on the daily chart, the wave 4 magenta. That wave was over and the target the previous high. And look where we are. What a fantastic trade on gold. Look how powerful the waves are. Let's have a look at my favorite stock that is working pretty good. And is Twitter. The plan was to short Twitter, and the target is at 20.63. From the last free video, I also pointed out that that was one of my favorites. And look how well is working our Twitter. Let's see how it's gonna open today. The market, it's Monday, and the target is gonna be the previous low. All right, traders. Thank you very much for your time. Now, what I want you to do is to visit ElliottWaveStreet.com, click on the membership tab, and here you will find all the details about our fantastic service. Scroll down, pick your plan. We have for the Forex trader, for the stock trader, or for the full access. These are the list of instruments that I cover every day with charts, with videos. You are going to receive also my trade plans, my trade ideas. So take the trial right now, just $19 to add Elliott Wave to your daily trading. Have a fantastic week, make some good money, and I'll see you in the next video. Take care, bye-bye.